Congress passed a bill just before the end of the new year, 5,593 pages of new tax act and stimulus. What does it mean for you? That's what we're going to talk about here today on Friends Talk Financial Planning. Hi, I'm John Scherer. I run a financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan Mermel, and I have a financial planning practice in Chicago, Illinois. John, I went to some continuing education, and it was about as exciting as you would imagine about the 5,000 page bill.
Did you get a whole copy of it so you could rest your head
yeah,
on it
no,
during the CE? Yeah, right.
I was like too big for that. I put together some notes, and frankly, I went to a particular website, which we'll talk about at the end. There's not the figuring out exactly what this says. I haven't really heard it in the press too much, and so I'm really grateful that we have this forum so that we can talk to people about it.
I'm looking forward to hearing what you have to say about this, Bridget. I know we talked a little bit before the show about just some of your notes, and like this is real life. What goes on in our world. I know that I've read a lot about the stimulus checks. Is it going to be 600? Is it 2,000? But there's so much more that goes into this. And of course, this is just an overview, right? It's not like these are the final answers. This is the initial run at things, and it's going to evolve over time. But this is sort of like the hot off the presses. Here's the initial look at things.
Right. A lot of times there's the law is passed, and then other people are implementing the law that is passed. And so sometimes people want to have specific answers to every question that might come into their mind. And that's just not necessarily available right now. Some specific answers will be available, but then there's this whole patience period. And we had to experience that the last round with both the PPP and with unemployment checks. Both groups of people had to be patient, like as everything got sorted out. And we want to have answers for everything. But again, the letter of the law doesn't necessarily say exactly how is this going to play out. So there can be a give and take there.
I think it's a good spot to point out that if people do have questions as they watch our show here, put them in the notes below in the comments, and we will answer. Like if maybe there's some things that we know, right? And if we know those, we'd love to answer those. Maybe that makes a future episode for ours. So if you have
like
questions or comments, ask them there, and we'll see. Maybe there's things that we know, and certainly it'll evolve over time, and we'll know more in the coming weeks and months, and we'll be able to share that at that point. So,
absolutely.
Well, what did you learn at your continuing education?
So first thing is the PPP.
Payroll
not
Protection.
PPP.
No,
okay. Let's not talk about PPP first. Let's talk about stimulus checks because I think that's going to affect more people.
I like that idea. Let's talk about getting money.
Yeah, exactly, money. So it's $600 per person. So if you're married filing jointly, that's $1,200, and then it's $600 for each child under the age of 17. If they're 17 and 1 day, no.
Nothing.
If they're 16 and 366. There's 365 days, 4 days?
Yeah.
Yes.
Right.
Okay. So, and it's based on your 2020, it's based on your 2019 tax return.
Because we don't have 20s yet, right? So it's based on last year, like last year meeting 2 years ago. Yeah, okay.
If you don't file a return because you're not required to, you're still eligible for a check similar to the last round. So in the last round, if you weren't, there's plenty of people who don't have to file tax returns, and they don't because if you don't have any taxable income and you owe zero tax, you're not actually required to file. So those people, they can still get a check, but they have to find out how to get a check. And I don't have those details with me right now, but again, if you're listening and you're interested and that applies to you, write us a comment and we'll look it up for you. Okay, so it's based on your 2019 tax return. It's based on your adjusted gross income. Okay, so that's after your 401k contributions or your IRA contributions. So the phase out starts if you make $75,000 a year if you're single, and again, that's after 401k contributions, or $150,000 if you're married filing jointly.
And that's after 401k contributions, but it doesn't include like your standard deductions and your exemptions and those things, right? So it's just income less 401k is the one big one. Maybe health insurance is the other big one that would count.
The health insurance if you're self-employed.
Yeah, right. Okay.
Like if
Okay.
health insurance, if you're not self-employed, it's not going to work. Yeah. So
What
it's,
about getting these? I know there's a lot of talk about it for people that need the money, right? Like, are these things being sent out now? I know I've read a little bit about different things. Did they cover that at all in
they
your
didn't cover
session?
that.
Okay.
Last time it was, if they had your direct deposit information, it got directly deposited.
Okay.
If they didn't, then they sent out a check.
Okay.
So I think it's a safe assumption to think it's going to be the same.
Be the same thing. Yeah. Again, breaking things that just literally within the last 10 days this has come out, right? So who knows?
Yeah.
The details aren't there.
Next thing, small businesses. If you didn't get a PPP loan and you regret that, Payroll Protection Act loan.
Plan, I think. Yeah.
Yeah. And you regret that, it's going to reopen. So if you didn't get an original PPP loan, then that's going to reopen. And it's a program that helps small businesses that were affected by coronavirus. You don't have to prove that it reduced your income, but you have to say that it did affect your business. And it's based on how much payroll that you have, or if you're self-employed, it's based on your self-employment income. Okay, so the original program is going to reopen. And then there's going to be what they call PPP2, the sequel. You know, and that's going to have more stringent requirements. So although it's still open, I think to the people or the businesses that probably need it the most. So you have to have less than 300 employees.
And that's down from 500 in the original. It was right. 500 last time. Now it's 300, right?
Right.
Yeah.
And your revenue has to be down by at least 25% in 2020 versus 2019 for one quarter. So say in, so
second quarter 2019, compare that to second quarter 2020. If there's a 25% loss, I qualify for that.
Revenue going down.
Revenue, right? Yeah, yeah. Revenue, top line, my sales, if you will, that sort of thing.
Sales.
Yeah, right.
Exactly.
Okay.
Thanks for the jargon alert. Yeah.
Yeah, right. Yeah, I forgot jargon alert. Gotcha.
Yeah. So your revenue, if your revenue is down, then for one quarter, then you're eligible. The loan is 2.5 times your monthly payroll. And if you work in the food service industry, it's 3.5 times your monthly payroll. The maximum amount that you can get is $2 million. That's versus $10 million for the last round for the original PPP.
I think this is a really big deal for those small businesses. Just to circle back, so I get it. If you didn't get PPP last time, maybe I know there's some folks that for various reasons thought that they shouldn't do it. You can go back and say, you know what, I wish I would have because my business wasn't affected in first quarter, but it was at the end of the year. Those sorts of things.
Right.
And even if I got it, and I say, listen, the major changes now, a little bit less employees than it was last time around. I've got the big one is number 2, right? I got to show that I had a loss quarter over quarter, year versus year, and then there's a small of revenue, right? Yeah, I say loss, but I had less sales in one quarter than I did the other quarter in the previous in 2019, and then there's a smaller cap on it, right? Instead of 10 million versus 2 million. Those are some of the
although
big differences.
if you've got a restaurant, you can get more money than you can.
Yeah. And then again, that to me, that makes sense, right? Those are the places where there's a little bit more focused maybe than it was in the original PPP. The PPP2 is trying to narrow down some of the eligibility.
Absolutely. Yeah.
Great.
And
great.
So, but I still think that there'll be a lot of businesses that'll benefit from it.
Absolutely.
Unemployment benefits. So this was partly just kind of keeping the money flowing of regular unemployment benefits. But often during a recession, the federal government extends how long people can apply for usually it's something like 26 weeks and they give them another 11 weeks, and I believe that's what's happening this time. And they also extended unemployment benefits for self-employed people, which again is something they did similarly to the last round. Now, when I was looking at it before, if I had my druthers, I would go PPP for people who are self-employed. versus trying to get unemployment benefits. Partly is it was just a lot easier. Like
Hmm.
at least in Illinois, the Illinois Employment IDES, which is the agency that handles unemployment, seemed to be just overwhelmed.
Hmm.
So, and everybody's, if you can't get through, then you're calling 5 times, so then that really overwhelmed them. So they seem to be really overwhelmed. And the PPP, you had to wait and figure it out. But then once you got it going, it seemed to be a good program. And I don't believe, and I'm not positive about this, that you can do both if you were a small business, period.
Yeah. As
Okay.
a self-employed person, right, in the past, meaning going back before 2019, there was no unemployment for
You never
self-employed
did
people.
that.
It didn't
Right.
happen. So one of the key takeaways I hear is, unemployment with the CARES Act back in the spring and now the new act here is that self-employed people do qualify, and then you have to take a look and figure out what's the best thing for your situation, but at least it's on the table for you as a self-employed person, right?
Exactly. And there's more factors involved, like the
Yeah.
pragmatic ability to actually get the money is a factor.
Yeah, right, right.
Okay. And then we have the last group of oh, and the other thing, back to the unemployment, is that I know that a lot of people benefited from the extra $600 of unemployment last time, and that's coming back, but this time it's $300 for 11 weeks, so that's $3,300 extra. And so that's on top of whatever unemployment your state usually pays.
Got it.
Okay, and then miscellaneous changes. Medical expenses are permanently deductible if they're 7.5% of your adjusted gross income. The above the line charitable contribution of $300 per person, so it's 600 if you're married filing jointly, is in place for 2021. It was in place for, they just came up with it for 2020. Now it's extended to 2021 as well. And
If I remember right on that one, Bridget, where last year it was $300 per tax return, basically. This coming year it'll be 300. If you're married, you can double it, or is that not? Am
it
I
was
thinking something else?
unclear. I'm glad you put that up, said that, because I thought it was $300 per tax return, but it is actually $300 per individual.
Oh, is that right?
So it's
Okay.
$600 a tax return. I found that out in a class during the class on, December 30th, and emailed one particular client who might have cared. Yeah. Like, so, I think there was a misconception about that. It certainly, it wasn't clear to me that it's actually per person, $300 a person, not
Okay, great.
married filing jointly is 600. Okay. And then the next thing is small businesses, meal expenses. So I've never experienced this in my tax lifetime. Meal expenses are 100% deductible. So again, this is trying to encourage going to restaurants. If eating at restaurants, I don't know what that means, but meal expenses are 100% deductible for 2021 instead of 50% deductible. Entertainment expenses are still not deductible, but the entertainment has got to be taking a big hit anyway because of COVID. So meal expenses 100% deductible. And then and this is just trying to kind of tidy things up. If you got PPP money, it isn't counted as income, and the expenses that you use to justify forgiveness are deductible. So this is the accountant's panties in a bundle provision,
Yeah, right.
because accountants don't like this because it's
Getting them
not.
unbundled is this provision,
Yeah,
right? Yeah.
it doesn't work. It doesn't work from an accounting standpoint, but the tax, they decided to do it. So we'll just figure that out, how to handle the accounting. And then educator expenses. So if somehow you're an educator and you don't use the entire $250 allotment that you have as a deduction on regular school supplies, you can also spend it on PPE, or personal protection equipment. And last but not least, there's no RMD waiver. So required minimum distributions, you still need to make them if you're over the required minimum distribution age, which has gotten raised to 72, but it's either 70 and a half or 72,
And that's a big one.
depending
I think
on
this
exactly when you became.
Yeah, that's a big one this year. It's like a change to the change, right? In the CARES Act in the spring, it changed it and said, listen, you don't have to take your minimum distributions from your IRA-based money. And then the new update says, no, that was just a one-year thing that going next. So this year in 2021, RMDs, minimum distributions, are back on the table. You have to do those things this year, right? That's the deal.
Yep.
Yeah,
So
yeah.
this has been a lot, and we're going longer than we usually like to. So I think it's a good time to wrap it up, and just to encourage people, A, to subscribe, and B, put in comments if you've got questions, and we'll expand upon what we're going through.
Absolutely.
Also, we'd like to talk about ACP, which is an organization both John and I are proud members of, or the Alliance of Comprehensive Planners. It's a not-for-profit group of planners that are tax focused and use the same philosophy that John and I use when we're
That's
doing
right.
planning. And you can check those out at acplanners.org.
That's great. Thanks so much for this breakdown, Bridget. I'm sure there's going to be more coming out in this in the next weeks, and look forward to responding to comments and talking to you again about it. So until
Great.
next time.